Hey everybody, it's Rob Campbell, the mortgage broker. It is Tuesday, March the 10th, and I thought I would shoot a very quick video here for you about why fixed rate mortgages are plummeting and how this might be the best time to take advantage of a market correction. Okay, so if you have a mortgage that's maturing in the next year, possibly even 2 years, and you want to see if you can consolidate any debts or even just lock in at a lower rate, I'm going to explain to you why this might be the best time to do it. Okay, so try to follow along with me here. I'm just going to move this and see if I can get my pencil here. Oh man, the picture's in the way. Getting super fancy with technology. All right, so fixed rate mortgages are priced off of the Bank of Canada bond yield. I'm not going to get super deep into this, but I'll just tell you why there's been a huge price discount just recently. So pricing for the bond yield is like this, and it's been just kind of going like this, and then just lately it went and it fell off a cliff. Okay, so right around here is where we've been at so far, and the pricing's been around 1.5%. It's a little lower than that. It's a little higher depending on the day, but mortgage pricing ends up coming in higher than what that bond yield is. So the mortgage pricing above that would be about 2% higher. Again, this is all ballpark numbers. I'm not getting super deep, just ballpark numbers. So 2% higher would give us a mortgage rate of around 3.5% I'm talking about the 5-year fixed mortgage. There are 1, 2, 3, 4, 5, 7, and 10-year bonds, and the pricing is also reflective of what those yields are. So anyway, back to the current 5-year pricing. So this bond pricing sticks around 1.5% and gives you a mortgage of around 3.5%. Well, just recently, I don't know if you know this or not, but there's a bit of a little outbreak of something, and global markets, financial markets have been taking a shit kicking, excuse the Spanish, and it has decreased stocks worldwide and also bond yields with the Bank of Canada. So people flood into bonds when there's uncertainty in the market, and because there's such uncertainty in the market, people are now investing more in bonds. And when people do that, the supply demand takes over and the pricing goes down when there's a flood into the bond market. So because of that, the pricing has decreased. Now, what does this mean to you? Well, the current bond pricing, oh man, I didn't even know I could move that around. How do we do that? Look at that. That's pretty fancy. Man. How do I go back to drawing? Bear with me. I'm going to erase this. Hold on. We're going to get super fancy now. I'm going to use this eraser. I'm going to erase this here because I made a boo-boo. I'm going to get my pencil again, and I'm going to zoom in right here. So current pricing right here is actually at 0.5%. That's what the bond's selling at right now. Again, super vague numbers, but you get where I'm going here. So because, remember, I said pricing for mortgages is around 1.5% to 2% higher than the bond yield, that pricing right now for fixed rate mortgages is around 2.5%. Now, this all happened just within the last week. It really plummeted within the last week. So fixed rate mortgages right now can be lower than that. They can be as low as 2.39% for purchases that are under 20% down. And there's a whole bunch of price indexing stuff there that we've got to sort out. But even refinancing rates, here's the kicker. Refinancing, or if you're up for renewal, refinancing rates are in that neighborhood, 2.69, 2.79%, some even lower, 2.59%. So this is a fantastic time to reevaluate your current debt load, your current investments with the market correcting, just to see if there's any room for changing things up, maybe securing you a lower rate with a lower payment, rejigging the whole thing. I'm Rob Campbell. I'm part of the Rob Campbell Mortgage team, and I'm here to help you. And I hope this video has explained a little bit of the hysteria with pricing in the market. That is why the bond yield has gone plummeting, and because of that, mortgage rates has also plummeted. Comment in this video below if you want me to reach out to you, or just message us through the page and we'll get back to you. Or you can call our office, and we'd love to book a free call with you to see if we can help you save some money. I hope you found this helpful. And again, I'm Rob Campbell. Thanks so much for watching.